Good morning, everybody. It's Chris here from Serene Education with the 4 majors and that's update for the 13th of September 2011. And we're looking at the euro against the US dollar to start with in our 4 majors update today. Okay, so we've seen a lot of negativity in the market. However, you'll notice that the price has fallen to 100% of the initial move. So that was the initial start of this downtrend, followed by a slight consolidation above the institutional moving average here. Very strong support and resistance level at 1400 psychologically, only for it to break, and we saw the next second extension of the initial one trading at 100% of that, and now we've seen a bounce at the 13500 mark. Now this area here also is a strong support and resistance level in the past. If I just put that in and you can zoom out, you'll notice there again we've had prior resistance support through the earlier parts of December and the earlier parts or latter parts of November, 2010, apologies. So a bounce higher. Now correction, how far and where will it bounce to? It remains to be seen. If you look at a projection, possible areas from the initial start, we've now breached the 23.6, 38.2, 50 and 61 are thereabouts above us. So intraday, let's have a look. Now the CTC is still to the downside. We have had this consolidation to the upside. We have had higher swings. However, if you look at it quite closely, resistance level is at 13,700. Notice prior resistance, resistance. Price needs to be trading above that. So make a mental note of that. Intraday, 13,700 is an area that price needs to be trading at well above, or to break above. To see any further movement or consolidation to the upside. Fail to see that, we'll definitely see price reverting to the downside. So on a daily, if we go to 13,700, there we go. It's just shy of the 38.2% fib retracement area on the daily. So as it stands now, want to see a break at least above our 30-minute chart or 50, if you depending on which time frame you're trading, above that 13,700 mark. So break above that, make sure that the CTC is in our favor. Break above here, trading above all the moving averages. You can see the institutional moving average trading below us. Stop underneath the price swing here at 1365, and we should be looking for upside movement to the, if that's the case. Failed to do so, and we don't see a break of 13,700, then we could see price falling over and reverting to the downside again. And because overall we are in a very bearish trend, we could see price falling yet further. So we could manage our trades, and ultimately 13,500 would be our first stop, because psychologically that's the long-term support and resistance level at that area. Next up is sterling against US dollar cable. Let's have a look at this. Here again, like its counterpart, the euro, we've seen steadily price action moving slower, lower, with lots of movement. We saw 1600 prior long-term support and resistance being breached, and since then subsequently you've seen a pullback to the underside and a continuation lower, and price is now testing a prior support and resistance level here at 15,800, which happens to be a consolidation area beforehand. We've seen a small trading range this morning in the Asian market session trading, and if you go to our smaller time frames, you can see that price action has been consolidating now, and there's a noticeable resistance level at roughly the 15,700 mark on our hourly 30 minutes. There we go. Just going with that, you can see that there's definitely resistance in this area here. It needs to be breaching or breaking that in order to see further upside movement to at least the institutional moving average. Failure to do so would obviously see price reverting to the downside. I'd like to see a break below these prior consolidation ranges here. So below that would be fantastic. Break below that would definitely see the lows again being reattempted roughly around here at 15,700 to start with. So as it stands, you can see the signals, CTC signals on the smaller time frames, very skittish, a lot of volatile 4-hour can show you the consolidation, but it seems to be consolidating further down. You can see the lows as it's going in, so definitely a ceiling level at this area here. And if we want to see price reverting to the downside, then obviously we'd like to see it fall over. A lot of wicks though, so this could be a consolidation. There is an opportunity if it breaks higher to trade at least to the prior support and resistance level here. You can see noticeable support or prior support at roughly the 15.9300 mark. So over on the 4-hour, clear indication of downside movement, swing lows, swing lows, swing lows, and we're seeing consolidation. So if anything, we could see it going sideways to at least this major trend on the intraday time frame before we see a further swing low occurring. A break of that, breach of that would see further upside movement. But as it stands, the CTC on the 4-hour is looking bearish, hourly bearish. We start going to 30 and 15, we start seeing indecision starting to take place. Majority bearish, but we're in a bearish consolidation trend, downtrend. You'll notice that for the most part we're trading below all the moving averages, and now we're seeing a consolidation above the two smaller time frame ones, the 20 and 50. If we find support here again at 15.8300 and a bounce higher, we need to see a clear break above 15.87. Got to wait, bide our time, break above 15.87. CTC's got to be in our favor, i.e. 15 minute needs to be in our favor. At the moment now it's still looking red for negative, so as it stands now, very indecisive. Got to be decisive. Institution moving averages trading above us. Could that be the factor? We do have a lot of news out this morning for sterling, in particular at 9:30 GMT. We have CPI year-on-year figures, RPI year-on-year figures. They don't expect any changes there. However, trade balance figures, they're expecting a 0.4% difference from the previous figure. So if that happens, if we get a lower figure than the forecast, we could definitely see that playing a major role in this morning's trading session. Next up is US dollar against Swiss franc. Look at the daily. Definite resistance level for now, shooting star formation at a resistance level, the institution moving average. Look at price action where it's trading now, 89.50 is a prior resistance. Didn't break and close above it. Institutionally, there's also the consolidation band below it. So if anything, we could look at potential pullback on this pair to at least the 85.50 mark, if anything. I've got to see a break and close higher than the 89.50 in order to see further continuations to the upside. Otherwise, we're seeing a consolidation against the major trend. You can see the institutional moving average acting as a clear resistance here. CTC on the daily has gone blue though, and it's the first time it's gone blue in a very significant period of time since early December of last year. So intraday, if we just take those numbers, for example, 89.50 as a ceiling level, look at our hourly chart. There's 89.50. Notice price action, lower swings going into this, and then as I mentioned on the daily, we have this consolidation band here, not too far off. There's slight consolidation for this pair, but if you look at it, 87.50 is potentially that consolidation area, and you notice that it happens to be price support and resistance over here on this time frame. Notice resistance breakout. So we're seeing a consolidation above here. Notice on the time frame at 8800, we're not seeing any lower swings. That has to be the case now. Price needs to be trading above this in order to see another reattempt of the highs. Failure to do so would obviously see price now falling lower. You notice swing low, swing low, swing low, all lower than the previous high, depicting price action to the downside. 89.50 we know is the strong resistance level to the upside. So we want to see price at least staying above this level here at 8800. Failure to do so would see price closing below it, and we could see continuation to the downside in that consolidation because of the major ceiling level or the institutional daily. Here we go. Price trading at the top end of this institutional shooting star after a major upside movement. This in conjunction with the institution moving average and a prior support and resistance level, we've got to see now a bearish engulfing pattern here. So an equal drive, same measure of this one here, would bring us to a 3 candlestick setup, the evening star formation, and we should be looking at further downside movement. So ideally, if we do see that, then we should be looking at potentially pullbacks to 23.6, 38.2, the 50% or 61.8 of that pullback. Last pair of the day is the US dollar against Japanese yen. Let's have a look at the daily time frame. You'll notice that price fell to trade higher than the 77.70 mark. Clear indication of resistance at this level here. 1, 2, 3, 4 days of, well, 3 days in particular of resistance at a prior setting level. Indecision candle followed by yesterday's decision bearish engulfing. Engulfed the entire range, and sure enough during the part, well, it traded quite significantly to the downside, but most of that was taken back during the latter part of the US session last night. Asian session this morning, I see the price continuing to fall to the downside, and that would be the case now as we've seen a rollover. It is a bit of a, you can see that price action did close 50% of the trading range, but because we've seen a significant resistance here, then obviously we should be looking for further downside movement. 76.50 would be our ultimate goal because we've been in the past, and it happens to be a very strong support and resistance level in the past. CTC, two parts of the four that are required are on the chart. So we have our blue arrow, blue candles, but the CTC on the other side is still red. So consolidation against the major trend, which happens to be the downside. The 50 period moving average moving over now. Could this be the ceiling level as well? So definite 77.70 needs to be breached to the upside in order to be still considered bullish. Until such time as that's doing it, then we should be looking for nothing more than downside movement intraday. So we look at it at the moment. You can see that our hourly chart, for example, is trending below all the moving averages, and the CTC is in our favor. So clear indication of lower swings. Price swing is lower than the previous one, which happens to be previous, and so we know price action is definitely trading negative. Had one going into this morning's trading session lower, so as long as price can stay below all these averages here, then we could see price being pushed lower. 30 minutes also, everything's trading below the moving averages. Same on the 15 and 5 minute consolidation. So as it stands now, if you look at the 4 hour in particular, you can see that we had swing high, swing high, swing high, swing high, breakout, consolidation, and now we should see continuation lower because of that, because you can see price action now is changing direction, breakout, the pullback, and now we should be looking continuation. Price is trading at the underside of the 4 hour chart. The price is trading under the institutional moving average on the 4 hour chart as well. So got the first part of our CTC set up on this, but looking at intraday ones, we can see clearly that price is trading negative and lower swings, so we should be looking for nothing more than potentially another reattempt of 76.80 in this case. So if I just extend, 76.80 is our first initial target, followed by the 76.50 overall as our second target. That's it, guys. Hope you have a fantastic trading day. Please ensure that you follow the rules when trading the CTC strategy template. Back it up with sound money management. Most importantly, keep it simple. It's so easy to get carried away and trying to look for the best setup. But if you just look at support resistance, look for potential breakouts, consolidations against the trend, and just bide your time. It'll be quite possible to grab your pips or to make a decent return. So have a fantastic trading day. Be aware of any news announcements today. I think we have some US data this afternoon with import month-on-month figures, expecting a really negative figure for that. So if it comes out worse than the forecast, then we could definitely see the US dollar falling further. We also have federal budget balance. That could be interesting. Expecting almost a $3 billion difference in that. So if the forecast comes even worse than that, then we could definitely see further extensions lower and the yen getting further strength against the US dollar. So be aware of it. Make sure you are aware of the potential for the fundamentals to probably play a part in price action today. Other than that, have a fantastic day and trade serenely.